Will the SBA pay for you to start a business or buy a business? In this video, I'm going to cover the new law changes that were passed by Congress, as well as the Consolidated Appropriations Act as it applies to businesses and all the ways that it looks like the SBA will pay for you to start a business. Welcome back to Mystery Money. My name's Nick. On this channel, we tackle all sorts of financial terms and topics that surround money. If that sounds like it may be interesting to you, hit that subscribe button below and make sure you turn on the bell for notifications. So to see how we got here, we have to go back to the beginning of the original CARES Act that was passed back in March. If you already have a lot of information or know a lot about the CARES Act, please feel free to skip past this part on to the next part about how those funds actually apply to you. In March of 2020, Congress passed the Coronavirus Aid, Relief, and Economic Security Act, otherwise known as the CARES Act. This provided stimulus checks, support for state and local governments, relief payments, and financial relief for small businesses. In Section 1112, Congress set aside $17 billion in order to cover the principal, interest, and any fees associated with the SBA loans from the passing of the law until September 27th of 2020. This provision was to make 6 loan payments and used to give the most vulnerable businesses a leg up to hopefully survive the pandemic. There was no application, no sign up, no credit checks. The banks were simply informed by the SBA to inform their borrowers that their payments would be completely paid for the next 6 months. They would receive this subsidy automatically, and the key issue is this would be a grant, not a loan. So they would not have to pay these payments back at the end of the life of their loan. For places like gyms, day spas, and restaurants, this would mean one less fixed cost that they would have to deal with over the next 6 months. So while this did help existing businesses with their SBA loans, it also meant that if you were looking to borrow money and you qualify for an SBA loan, you could get the first 6 months of your payments paid for. This caused a lot of applications to start to flow into lenders, as businesses saw it as a way to expand and potentially refinance high interest debt from other lenders and roll it into an SBA loan, all while receiving 6 months of payments for that. Although it's a worthwhile program, entry is not as easy as you think. In order to qualify, the bank has to prove that you do not possess a credit elsewhere test, which means you cannot get credit any other lender for the similar terms or favorable terms that you could for the SBA. And the SBA has a strict stipulation of if you are refinancing debt, you have to save at least 10% of the payment or 10% of or savings of 10% in the interest rate. And I don't mean a 10% interest rate, I just mean 10% of that interest rate. So if it's 10%, let's say your interest rate is 10%, if you save 1%, you would qualify if the SBA's rate would be 9% versus your 10%. So businesses that are deemed high risk benefit from utilizing the SBA program. The credit stipulations would still hold and you would not be eligible with a credit score below 550. I highly recommend SBA loans. If you check out my other videos on my channel, I'm a proponent for them. I've done many of them. I have one myself, so I do feel the value that they give. This is just an added benefit. Up until this law passed, it was kind of seen as a secondary product, or, oh, I have to get an SBA loan because I can't get this. When this program actually brought to light the benefit, and a lot of borrowers are benefiting from the use of the SBA. If you want more detail about the process, I'll link the how to get an SBA loan to start a business. I'll put it here and I'll also link it in the description below. With the passing of the Consolidated Appropriations Act of 2021, the program was extended to include an additional 3 months of principal and interest for existing loans, and another potential 5 months if those businesses were shuttered or sustained a severe economic loss. There's a list of NICS codes, which is basically the number that your business operates under. It's found on the left top corner of your tax return if you are an 1120 or an 1120S. It's listed on there under operating code. The first 3 digits or 2 digits, depending on what the SBA decided, tell you that those industries were hardest hit and they deserve the extra 5 months. There's also additional caps that they put in place, such as you cannot have more than $9,000 worth of SBA payments to any one borrower, and that's combined. So if you have several SBA loans, they cannot exceed $9,000 per month. The banks still have not received guidance as to how to apply anything over the $9,000 per month. So will you just receive a bill for that? Will it automatically deduct it? Those guidelines have not been released yet. There is an issue with the program that wasn't addressed in the newest law. It actually carved out what you call a donut hole for anyone received a loan after September 27th but before February 1st of 2021. So anybody that received an SBA loan during that time period, it doesn't state in the law that they will get the payments paid. I think it was an oversight, and I'm hoping they'll correct that soon. So back to how the SBA will actually pay you to start a business. If you were to apply outside of the donut hole, so after February 1st of 2021, your first 6 payments will be paid by the SBA, principal and interest. So in essence, they would be paying for you to start a business. But let's go over what the cost of that free money is. As I go over in this video here, the benefits of an SBA loan. Typically, the process is much more complicated than a traditional commercial loan. And this is due to the riskiness of the business, either a startup or an industry that tends to carry more risk for lending. You will pay a higher interest rate, you're going to have a variable rate, and you're going to pay an origination fee. And as I stated, with the rate, a majority of the time it will be a floating rate fixed to the prime. So as prime increases, your rate goes up, and as prime decreases, the rate goes down. Now, prime has been set at the same point for the last 10 months. Whether it goes up or not, that could be anyone's guess. If your rate is tied to the Wall Street Journal prime rate, then when it goes up, your rate will go up. And in turn, your payment will go up. To look at the real effect, let's say you have a $100,000 loan for 10 years. If you have a rate 2.25% higher, which is the typical spread above prime for SBA loans, over the course of 10 years, you would pay $36,000 in interest. Were that a traditional loan with a similar interest rate but lower by 2.25%, you would pay $24,000. So $12,000 more over the life of that loan simply to have an SBA loan. Now, a payment on that would be about $1,135 a month. If you were before the donut hole or after the donut hole and get 6 months of payments free, that would roughly lead to about $6,810 in savings, or the amount that the SBA would pay. So that would be principal and interest. The amount of your loan would only go down by the principal portion of the payment. But still, you're getting the entire payment paid for 6 months. Typically, there's an origination. Now, with the passing of the Consolidated Appropriations Act, they waived guarantee fee for the SBA portion of the loan. The SBA charges a one-time fee of between 1% and 3%, and it's a progressive scale for any amount that they guarantee. If it's a 75% guarantee, $100,000, they guarantee $75,000. $75,000 times 1%, you will pay $750. That would be your origination fee on the day of settlement. It comes out of loan proceeds and it's paid. So the short answer is yes, you will be paid to start or buy a business, but I would hope that you would not want to go through this entire process just to get 6 months of payments waived. It's simply a bonus to existing loans or existing borrowers who needed that money to get them through the pandemic. Up until the last few months, the SBA loans were always looked as a second-class loan. Basically, people that weren't able to get financing. A lot has changed, and now the program has become so popular. I believe that's why the SBA has put these restrictions on some of the loans, such as the $9,000 cap. They even see the fact that this looks like free money to everyone. If you're a business that could benefit from an SBA loan, I think it's in your best interest to apply after February 1st, but before September 27th, 2021. If you are in that period, you will get the 6 months of payments, and it'll help your business to either start or grow faster or maintain. You may be able to refinance existing debt. If you follow into that 10% save, you may be eligible to refinance that loan to save interest. I know one of our semi-trucks, I think our interest rate is 9.65%. So after February 1st, I will be contacting my bank to say, hey, I would like to refinance with an SBA loan possible. If not, traditional is fine, but anything below 9% would be a savings. Thanks for taking time to watch this video. If you have any other questions about SBA loans or loans in general, post them in the comments below. Until next time, have a great day.